This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. July starts on shaky ground everywhere, although the ground is firmer in the US than China. As this is the first week of July, it'll be heavy with PMI survey results, except New Zealand, of course. But the most important release this week will be the American labour market report, their non-farm payrolls, for June on Saturday. Analysts currently expect another 180,000 jobs gain there. And before that, we get their JOLTs report. In Europe, election results in France and England will shape the week, but so will CPI inflation rates. Not only do we get them for the EU and other big EU economies, they also come for South Korea, Turkey, Indonesia and the Philippines too. And over the weekend, Japanese industrial production data was released, showing it rose 2.8% in May from April, beating market forecasts. It also recorded an unusual year-on-year gain too. This was the second increase so far this year, mainly due to strong motor vehicle sales. They think June will slip back, but July will be another gainer. But it was all backwards in China. The official factory PMI was steady for the second straight month as expected. The latest result marks the fourth contraction in factory activity so far this year, as Beijing struggles to spur an economic revival amid weak demand, deflation risks, and a protracted property weakness. New orders, foreign sales, and buying levels all declined for the second month in a row. And their official services PMI slipped as well, now barely expanding. While it was the 18th consecutive month in expansion in June, the latest result was the softest since December, as new orders and new export orders continued to contract. On Wednesday, we may get the Kaijin versions of these two PMIs. Recently, they have delivered better results, although not significantly different. In the US, the inflation measure the Fed prefers, the Personal Consumption Expenditure Price Index, was unchanged in May from April, following a 0.3% rise in April. This was what markets were expecting. That means the annual PCE rate slipped to 2.6%, its lowest since March 2021. The May CPI was 3.3%, and we get the June CPI for the US on June the 13th. American personal spending was up 2.4% in May from a year ago. Personal income was up a bit less. US durable goods orders were unchanged in May from April, but were 1.2% lower than the same month a year ago. Of more concern, however, will be that capital goods orders fell 10% on the same basis. Eventually, that may weigh on employment, but so far it hasn't. Last week, initial claims for jobless benefits fell from the prior week. Compared to the same week a year ago, the number of people on these benefits was higher, but in relation to their workforce, that gain was insignificant. US pending home sales for May fell when a bounce back was expected, reinforcing the funk the American housing market is in. In fact, local sawmills have been closing on new home demand, and even that hasn't stopped wood prices from falling to post-pandemic lows. Their residential construction and home improvement markets are buckling. And the widely watched University of Michigan Consumer Sentiment Survey was little changed in June, but it is up more than 6% from a year ago. And the ECB said its survey of consumer inflation expectations over the year ahead are now back to 2.8%, the same level they were at when they started the survey in early 2020. They peaked at 5.8% in October 2022. Those surveyed said they felt inflation ran at 5.8% over the prior 12 months. It actually ran at 2.7% in the year to May, but averaged 3.9% over those past 12 months. The June results come later this week and are expected to be 2.5%. In France, exit polls show that far-right candidates probably made gains in their weekend first-round elections, garnering about a third of the votes. Turnout was high at 60%, but the final outcome is still uncertain. The second round will take place on July the 7th. The rise of container freight rates continued last week, up 4% from the prior week, to be now a massive 250% higher than the same week a year ago. The main culprit was outbound rates from China to Europe, hostage to the Yemeni Hutus and their piracy. Bulk cargo rates are up 2% for the week, and they're again in an uptrend. They're up 72% in the year. The US Treasury 10-year yield is now at 4.39% and unchanged from Saturday. And the price of gold will start today up $6 from Saturday at $2,326 an ounce. And oil prices are unchanged from Saturday too, at just on $81 a barrel in the US, while the international Brent price is still just under $85 a barrel. And the Kiwi dollar starts today slightly softer from Saturday, just on 60.9 US cents. Against the Aussie, but little changed at 91.3 Australian cents. Against the euro, we're also unchanged at 56.9 euro cents. That all means our trade-weighted index starts today still lower at 70.5. And the Bitcoin price starts today at $61,628 and back up 1.6% from this time Saturday. But volatility over the past 24 hours has been low at just on plus or minus 0.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.